Hello and welcome to our channel. If you're an entrepreneur, startup founder, investor, or just someone interested in Nepal's business environment, this video is for you. The Nepal government has introduced game-changing amendments to the Company Act 2063 under the new Ordinance for the Improvement of Financial and Business Environment 2025. This means big opportunities for startups, investors, and NRNs. Let's break down these changes and see how you can benefit. Stick around till the end because we'll also discuss legal risks and compliance tips to keep you ahead of the game. Let's dive in. NRNs can now be company promoters. Yes, non-resident Nepalis, NRNs, can now officially start companies in Nepal. They just need a valid NRN citizenship certificate to register a business. Why is this a game changer? NRNs can now invest and create jobs in Nepal. It builds stronger economic ties between Nepal and the global NRN community. A Nepali tech entrepreneur in the US can now legally launch a software startup in Nepal without any extra hurdles. Legal note: make sure your NRN citizenship certificate is valid to avoid delays in company registration. New share issuance mechanisms. Sweat equity. Big news for startup founders. Nepal now allows companies to issue shares for non-cash contributions such as intellectual property, patents, AI algorithms, goodwill, brand value, reputation, and technical services, expertise consulting. Startups can now allocate up to 40% of their paid-up capital as non-cash shares. That's double the limit of 20% provided for other companies. A software startup can grant equity to a co-founder for contributing a patented AI algorithm instead of cash investment. Legal safeguards. Non-cash shares must be valued by a certified accountant or engineer. Valuation must be documented and approved during AGMs. Risk alert. Improper valuation can lead to rejection of share issuance. Follow the rules. Employee stock option plans, ESOPs. Introduced. Great news for employees. The government has finally introduced employee stock option plans, ESOPs. Why should you care? Retain top talent with stock ownership. Employees become company stakeholders. Companies can conserve cash while rewarding employees. Key rules for ESOPs. Must be approved in the AGM. Lock-in period to prevent immediate resale. Companies must report ESOPs in annual financials. Legal and tax considerations. ESOP shares may be taxable income for employees under Nepal's tax laws. Consult an expert. Easier premium share issuance, Section 29. Raising funds just got easier. Companies no longer need 3 years of audited financials to issue premium shares. Why does this matter? Startups can fundraise faster without waiting. Less bureaucracy means more innovation. And here's a tip for startups. While financial reports aren't required, companies must still disclose fair share pricing to investors. Stronger role of annual general meetings, AGMs. AGMs are now mandatory for major decisions like issuing non-cash shares and ESOPs. This ensures greater transparency and accountability. And here's a bonus tip. Private companies can skip AGMs if their articles of association allow passing written resolutions. Governance flexibility for directors, Section 89. Directors can now hold positions in multiple private companies with similar objectives. But there's an exception. This doesn't apply to banks, financial institutions, and insurance companies. And penalty relief for late filings, a 90% discount. Mr. Deadline? No worries. The government is offering a 90% penalty waiver for late submissions if filed by Ashar 2082, which is mid-2025. Pro tip: act now to avoid paying full penalties later. 8th, we have easier closure for inactive companies as per Section 136. A. Companies that are no longer active can now close down through a simplified process. But it's important to note, You must clear all tax dues and liabilities before applying. The Registrar's Office will issue a 30-day public notice before cancellation. Ninth, let's talk about the new regulations for foreign companies under Section 154. Foreign companies must now report directly to the Company Registrar's Office if no sector-specific regulator exists. Key compliance rules include submitting annual filings and registering all business activities. Non-compliance can lead to penalties or operational restrictions. 10th, special resolutions are now mandatory for loans and guarantees as per Section 176. Companies must now pass a special resolution at annual general meetings before giving loans, guarantees, or securities. Why does this matter? It increases transparency and protects shareholders from unapproved financial risks. Finally, what should businesses do next? Here's an action plan. Non-resident Nepalis, start your company today. Startups, use sweat equity and ESOPs to grow. Established companies take advantage of penalty relief and fundraising options. And foreign firms, make sure to follow the new compliance rules. This is Nepal's moment to thrive in business. Are you ready to make the most of these amendments? Let us know in the comments below. Like, subscribe, and share this video with fellow entrepreneurs. See you in the next one.